Hello friends, welcome to the Economics of Finance Excellency batch. So let's continue with our discussion on national income, and this is going to be the last lecture for national income, and we're just left with a few numericals that we have to do, the back questions as given in the ICI module, and after that our chapter is complete. The national income is complete. So what you have to do after that is you have to go through all the topics of the book, right? You have to go thoroughly with all the topics of the book, whatever the notings we have done, whatever the small things that we have discussed over a period of all these lectures. So all these things you have to do after the completion of this particular lecture, right? So that why it is important, so that this chapter is done and dusted totally, right? You are absolutely ready with this, and at the time of revision, this is going to be really easy for you people with my books. This is going to be really easy. Just go through with that, done and dusted. That's it. Okay. So let's continue. Let's start with the back questions, the application oriented questions. Question number 1, compute the national income. This is going to be a small lecture because this is a very easy part now. Compute national income. Consumption is given 750, investment is given 250, government purchases, exports and imports. Sir, what is there? Very simple, sir. That means he is asking you to calculate the national income, and it will be calculated by expenditure method. Right? By expenditure method, it will be calculated. Sir, how? 750 plus 250, that is investment, plus government purchases, plus exports minus imports. So that will give you the national income. Let's see if it has been done like this only. Sir, C is consumption plus investment plus government purchases, X is exports, and M is your imports. Right? So net exports, that will give you the national income, that is 1000. Y denotes the national income here. Okay? Y denotes the national income here. Clear? Any doubts in this thing? Okay, let's move on to the second part. He says calculate the gross domestic product at market prices and derive the national income from the following data. He says first you need to calculate the GDP at MP and then calculate the national income from GDP at MP, right? What is the information that is given? Inventory investment is given 100, exports are given, indirect taxes are given, net factor income from abroad is minus 50, then personal consumption expenditure, gross residential construction investment is given, depreciation is given, then imports are there, government purchases are there, gross public investment, gross business fixed investment. That means if you look at the information, by looking at the information itself, you should be able to identify that which method of national income he is talking about. Sir, from the information we are able to understand that he is talking about the expenditure method, right? Now, what is there in the expenditure method? How do you calculate GDP at MP in the expenditure method, sir? We will take the personal consumption expenditure. Let's first talk about GDP at MP. What all will be included in that? The personal consumption expenditure will be included, that is 3500, right? Plus then government purchases of goods and services 1000. Then gross domestic capital formation, in that we will take the gross public investment and the business fixed investment plus 200 plus 300, right? This is taken, this is taken, this is taken. Personal consumption, gross residential construction investment will be taken, right? So this is taken. Inventory investment will be taken. The changes in inventories, definitely sir, we take that, right? Plus the exports, that is 200, minus the imports, that is 100. So what is GDP at MP here? We need to calculate it. 3500 plus 1000 plus 200 plus 300 plus 300 plus 100 plus 200 minus 100, that comes to 5500. Right? This is your GDP at MP. Now, how do you calculate the national income from here? You have GDP at MP, that is 5500 here, right? And what is given? Depreciation is given. So from depreciation, we can calculate NDP at MP, right? We can calculate NDP at MP, that is GDP at MP. One second, we'll change it right? So GDP at MP minus the depreciation, minus depreciation. What is depreciation here, sir? 50. That will give you what? That will give you NDP at MP, right? So that is 5500 minus 50, that is 5440. Sorry, 5450. Now we can go from domestic to national, right? So we will add here NFIA, which is minus 50, right? So from here we will get NNP at MP, that is 5400. And in this we need to subtract the indirect taxes minus net indirect taxes, that comes to 100 rupees, right? So 5300 will be your NNP at FC, that is your national income, right? Let's cross verify if it is, the answer is same or not. 5300 crores. Clear? You can do it anyways, sir. You can do it anyways, right? The only thing is that the basic will remain the same. That is what they have done here. That is what we have done it here. I hope it is absolutely correct. Clear? Correcto? Hey, sir. Correcto? Yes, it is correct. But it should be clear, right? What all things we have taken and how it is being done. So we are done with question number 2 here. Let's move on to question number 3. Find GDP at MP and GNP at MP from the following data in crores using the income method. Show that it is the same as obtained by the expenditure method. Right? Now he says you need to calculate it by two methods. One is the income method. Another one is you have to use the expenditure method also. What two things you need to calculate? GDP at MP and the GNP at MP. So first we will solve it by income method. Let's do it by income method first. Right? Now in the income method, we have learned first to calculate what? We calculate NDP at FC. Okay, we will calculate that only. NDP at FC. How you will calculate it? Wages will be taken. Yes, sir. 6508. That is the wages plus indirect business taxes. No, sir. Interest. Yes, sir. Interest will be taken. Domestic investment. No, sir. Government expenditure. No, sir. Rental income. Yes, yes, yes. Rental income will be there plus 34. Profits. Yes, sir. Profits will be there. Plus the mixed income. Yes, sir. Mixed income will be there. Anything else will be there? We have taken the wages, that is the compensation of employees. We have taken the operating surplus, that is interest plus rent plus profits, right? That becomes my operating surplus. Plus I have taken the mixed income also, right? So I think we are ready with NDP at FC. It comes to 6508 plus 1060 plus 34 plus 682 plus 806. That comes to 9090. Now you need to calculate what? You need to calculate GDP at MP, right? GDP at MP. So first I will calculate here NDP at MP. What I will be doing, that is NDP at FC plus indirect taxes, right? When I have to go from MP to FC, and now I have to calculate the MP market price, that is factor cost plus net indirect taxes. So this is 9090. And what are the net indirect taxes that are given? That is 1000 rupees, no subsidies, right? So 1000, that comes to 10,090 rupees. Now from here, I will be calculating what? I will be calculating here the GDP at MP. GDP at MP. What is GDP at MP? That is NDP at MP. Right now from net to gross plus depreciation. 10,090 plus what is the depreciation that is given to you? That is 800. So that comes to 10,890. So this is the first part that he is asking, that is GDP at MP. Now the second thing he is asking is to calculate the GNP at MP. GNP at MP. So that will be GDP at MP plus NFIA. That is the net factor income from abroad. That is 10,890 plus 40 rupees. Right? 10,890 plus 40. That comes to 10,930. So these are the two answers that we are getting, and we are going to verify if we are correct or not, right? We have done it by income method. So let's see by income method if we are getting the right answers. Yes, 10,890 and 10,930 rupees. Clear? Okay, so now we are the same question. It says you have to do it by the expenditure method. The same thing, you have to do it by what? You have to do it by expenditure method. Now in the expenditure method, we directly calculate GDP at MP. How will you calculate GDP at MP? That is personal consumption, that is 7314, absolutely correct, plus what else is there? Government expenditure is to be taken, that is 2196, plus any other thing, sir? Domestic investment, yes sir, it is to be taken 1442. What else is to be taken? Plus the exports are to be taken, that is 1346, minus the imports, that is 1408. Anything else left? Personal consumption, depreciation, wages, indirect business taxes, no. Interest, domestic investment, we have taken. Government expenditure, we have taken. Rental income, no. Exports, no, no, no. Okay. So I think this should be our GDP at MP. That comes to 7314 plus 2196 plus 1442 plus 1346 minus 1408. That comes to 10,890. Right, 10,890. So next he is asking us to calculate GNP at MP, right? That is 10,890, that is GDP plus NFIA, that is 40 rupees. That comes to 10,930. And the question is asking that, sir, is it same? Yes. Under the income method and under the expenditure method, these are absolutely same. And we have proved it. Correct? Any doubts in this thing? Right, sir? And the institute also says you have proved it. Yes, sir. We have absolutely proved it. Correct. Let's move on to question number 4. Question number 4 is very, very easy. Nothing else in there. From the following data, calculate the gross national product at market price using the value added method. So value of output in the primary sector is given, net factor income from abroad, value of output in tertiary sector is given, intermediate consumption in secondary sector, value of output in the secondary sector, government transfer payments are given, intermediate consumption in tertiary sector and intermediate consumption in the primary sector. So the first thing, what do you calculate? Sir, we calculate here the gross value added at market price, that is GDP at MP. Right, that will be value of output of the primary sector 500 minus the intermediate consumption of the primary sector, that is 250, right, plus the value of output of the tertiary sector, value of output of the secondary sector, let's take it, output of the secondary sector, that is 900 minus the intermediate consumption 400, plus what is there, plus the value of output of the tertiary sector, that is 700 minus the intermediate consumption, that is 300. So what it will be? 250 plus 500 plus 400. 250 plus 500 plus 400. That will come to 1150. This is your GDP at MP. He is asking you to calculate the gross national product at market price. That is GNP at MP. That is 1150 plus NFIA. NFIA is minus 20. So it will be minus 20, that is 1130. Sir, what about the government transfer payments? Do we take transfer payments in the calculation of national income? We have already discussed about it. Do we take transfer payments in the calculation of national income? No, sir. Right? And if in the same question, if in this particular question, he asks you to calculate the personal income, will the government transfer payments be included in the personal income? Yes. Right, because the personal income includes any kind of receipts from national income, from transfer payments, any kind of money which you are actually receiving, that will be included in the personal income. Right, so we are done with question number 4 also, 1130. Right, the transfer payments will not be considered. Right, sir, absolutely correct. So let's move on to the final two. 5. Calculate the sales from the following data. Subsidies are given, opening stock is given, closing stock is given, intermediate consumption is given, consumption of fixed capital is given, that is depreciation. After that, profit is given, the net value added at factor cost is given to you. Right? He's asking you to calculate the sales. What he is given? He has given the net value added at factor cost. Now, what is net value added at factor cost? Using that, we have to solve this question. One thing is absolutely clear. Okay, net value added factor cost. What is that net value added? That is sales plus the change in stock minus the intermediate consumption minus depreciation minus NIT, that is the net indirect taxes. Right? Sir, how is it possible, sir? See, this is what? Sales minus change in stock minus intermediate consumption. This is what? This is your gross value added at market price. Right? When you subtract depreciation from it, what is that? That becomes your net value added at market price. And when you subtract the net indirect taxes from there, what that becomes is net value added at factor cost. And that is what is given here. Right? How do you calculate the gross value added at market price? Sir, sales plus the change in stock, that is value of output, minus the intermediate consumption, that gives you the gross value added at MP, minus depreciation will give you the net value added at market price, and minus the net indirect taxes will give you the net value added at factor cost. So everything is given, the sales figure is not given. So you can easily calculate the sales from here. Right? Very simple, sir. Okay, we are done with question number 5 and question number 6. The similar question we have already done it, right? So I'll give you the homework for this question number 6. And with this, the chapter of national income is absolutely complete from my side, right? All the concepts that I wanted to cover. Now it's your turn. What you have to do is you have to revise all these topics, revise, go through, and the small things should be fixed in your mind thoroughly, that what is there in this chapter, right? So the next chapter that we will be starting in the next part is the Keynesian theory of national income. That is the Keynesian theory of national income. Again, very, very important chapter this is, and we are just going to love it. Don't worry. Right? We are just going to love this chapter. As we have loved the national income, the same way we are going to love this chapter also, the Keynesian theory of national income, but very important from examination point of view. So everybody, please share it with all your friends. And if you are new to the channel, you have not yet subscribed to the channel, do not forget to subscribe to the channel and share this video, like this video, right? Because that is a motivation for us to keep providing, keep going for you guys, right? So see you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.